Exxon Mobil saw its third quarter profit nearly half today as lower oil prices and weaker margins in refining and chemicals saw earnings drop to $3.17 billion, £2.5 billion. The oil giant's three main businesses all reported lower year-over-year profit as earnings fell 49% from $6.24 billion a year earlier. Read more. Shell profits slide 15% in third quarter. Shares fell to 75 cents per share, which still beat reduced expectations for earnings of 67 cents per share. Last month the company warned results would suffer as a result of lower oil prices, prompting analysts to reduce estimates from 86 cents per share. Maybe expectations were a little bit weak going in, but I think overall it is probably slightly negative relative to expectation, said Anish Kapadia, Director of Energy at London-based Palissy Advisors. The results mirrored the performances of fellow supermajors BP and Royal Dutch Shell, which both suffered a considerable decline in earnings over the same period. Prices have fallen for oil and gas as U.S. shale producers keep pumping more oil amid slowing global consumption growth. Exxon Mobil has been investing in major projects to boost production at a time when investors have been pressing oil companies to cut spending and increase returns to shareholders. It spent $7.7 billion in the third quarter, up from $6.6 billion in the same period the year prior. Profits in Exxon's oil and gas production unit were down 49% to $2.17 billion on weaker prices, its lowest earnings in 2 years. However, production rose about 3% to 3.89 million barrels per day, the fourth quarter in a row of year-over-year gains. Read more. Weak oil prices push BP to $750 million loss. Exxon Mobil's refining business was down 25% from last year, due to lower margins for its gasoline and diesel, whilst the company's chemicals arm fell 66% year-over-year. Despite this, Exxon shares were up 2.6% in today.Main. Image credit, Getty. For more on this story, visit the news article link.